Hello there. Now today we're going to be talking about the ICT Silver Bullets. Inner Circle Trader does this. This is his. It's absolutely not mine. He does a video on it as well, which you could watch. He mainly looks at futures markets. I do it for Forex markets. I did a video about it last week. I've been asked to make it simpler. So here we go. Now I've got to warn you, if you don't follow these rules, you might as well just throw your money out the window. Don't worry though. I'm going to make it so easy, even a monkey could do it. Watch this video right to the end, alright, because I'm going to tell you the 5 rules that you need to follow. I'm also going to show you some examples on the chart as well. Can't make it easier than that. So with that all said and done, let's hit the charts. Here we go then. Rule number 1, you just need to make sure you're on New York local time, which you do down here on TradingView. Very simple. Wait until 9:30 a.m. Not 9:25, not 9:38. Not 7 o'clock, 9:30 a.m. That's rule number 1. Rule number 2. Mark out the swing high and low at 9:30 a.m. on the 5-minute chart. If that's 9:30, I'm marking out a swing high here. I'm marking out a swing low here. Generally look back to 9 a.m. to find this. There's no hard and fast rule. If there's a really clear swing high or low at 8:55, use that. But generally I'm looking back half an hour to find the swing high and low, and I'm marking them out on the chart like this. Rule number 3. Wait for a run on liquidity on either buy side or sell side, whichever happens first. Here at 9:30 there is a run on sell side. That's the first one. That's the 9:30 candle. That's the low I've marked. That's the high I've marked. The first run is there. Okay, doesn't matter what time it happens. Ideally you want it to happen fairly quickly, but it doesn't really matter. What happens then is you will wait to see if there's displacement. You will then wait to see if there's a market structure shift. You will then wait and see if there is a fair value gap created. Only then will you take a trade. That's it. That's very important, is point number 4. You need these 3. If you get displacement and a fair value gap, it's no trade. If you get displacement, a fair value gap, no market structure shift, it's no trade. If you get all those 3, but there isn't a run on liquidity, it's no trade. You have to have all this to enter. And that's it. It's as simple as that. Now, if you've no idea what displacement is, just nod your head and pretend you do. Actually, I've got a little guide for you. Here we go. So displacement is when the price of a currency pair suddenly moves away from where it currently is very, very quickly with a lot of gusto and a lot of force. That is essentially displacement. A big candle, big bullish candle or a big bearish candle, very fast, and it moves in one direction. That's displacement. Generally speaking, it will cause a market structure shift, and one of those is simply a break in market structure. That's all it is. So this is downward, 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 downward. Oh, and then it's broken this here and created a market structure shift, creating a fair value gap here, and that's where we would enter, and away we go. That's it. Should we have a little look at the charts? So here we are on Euro USD. This is the 5 minutes chart. It's 9:25 a.m. So we wait until half past and we mark our swing high and low. Generally, I'm going back about half an hour here. Not a hard and fast rule, but it's one I use. So if we're looking back, that I would say is a key swing high. Yep. And I would say that the swing low is right here. We then drop down to the 1 minute and we wait to see if we get a break of either of those. Okay, so we've got a break of the low here. So we're looking now for a market structure shift. Still going down. Now we've come up here. Now that's quite a big candle. That's broken that previous high there. So I would say that that is a market structure shift to the upside. Displacement, because it's a big bullish candle. And there's another one. So we've created a fair value gap as well here, which we could enter off. So let's have a look. We've gone higher. Let's wait for the next candle. We've created another fair value gap, which is here. Can you see? Another fair value gap. So we could enter off one of either of those really. What I would do is I would probably target all the way down to there. And then what are we looking for? What are we looking to target? Well, we could target up here, because that was our swing high. It's a 2-to-1. Let's just drop it to a 2-to-1. And let's see if we hit that. Let's go. We've been tagged in. We're going up. We nearly hit target price there. We're sort of ranging around a little bit here. Let's keep going. And there we go. We're out there. That's a nice 2-to-1 there. Brilliant. Okay. Let's go to the next day. So let's keep going forward. That was well stopped. 9:25 a.m. Next candle is 9:30. Let's mark our highs and lows. So there's a swing high. Where's the swing low here? Well, I would just go with that. That is honestly what I would do. I would say that that area there is the swing low. Let's drop to the 1 minute. And let's wait and see if we have a break of either of those. There's a break there to the downside. Don't really see a market structure shift yet. We have another break and another one. It's better to see a big break. We like that. That's nice. Let's see what happens. So we're looking for a break in market structure, or a market structure shift. You'd want to see price trade above this for me to consider it a market structure shift. So let's have a look. Not yet. Oh, there we go. And that's not displacement. If it had closed there, it would have been, but it's still a break, but it hasn't closed above. So I'd be looking at the next candle, which hasn't either, and that's dropped further down, and we go in, and we go in, and we go in. Now we're looking good. Still want to see a break of this high. That's what I'm looking for. We haven't got one yet. Ah, there we have. Just about. Let's look at the next candle. Ah, beautiful. So, displacement, market structure shift, fair value gap created. Let's look at the next candle. And another fair value gap created. So again, I'll be looking to enter there. That's a long stop, so I'll probably put my stop just under. And then you'd be targeting there really, which is a 1-to-1. I like better than 1-to-1. Is there anything higher that we could stage up to? We could stage up to there, which would be a 3-to-1 potentially. Let's go with 2-to-1 first. Let's go to 1-to-1 first and see what happens. So we tagged in. And there we go, 1-to-1. Let's just see what would happen if we'd have targeted up here, which should have been 3-to-1. We'd have hit that as well. Nice 3-to-1. And that's it. There's 2 examples for you. Simple rules, simple to follow. Hit me up in the comments if you've liked this, if it's worked for you. Test it out yourself on the charts. Test it out on different pairs. If you've got any questions, ask them below and I'll try and answer them for you. As always, like, subscribe, share, do what you need to do. Until next time, bye for now.